Hi everyone, my name is Minqi. I'm the co-founder of Relativity. Today I will show you how Relativity optimizes the efficiency of the financial markets. To begin, ask a question. How efficient do you think financial firms are operating? The answer is not at all. Most financial firms win-loss ratio average below 60%, and oftentimes they're below 50%. In fact, you find that most fund managers cannot even beat the S&P 500. Why? One explanation is that these professional funds are fixated on short-term profits. Doing so may increase the fees and commissions. However, this may result in poor timing in order execution. Not being able to enter and exit at the right time increases the frequency of market boom bust cycles, which leads to inconsistent returns for investors. And that is the problem we're facing today. And this is where the theory of quantitative relativity, or TQR, comes in. Using TQR, we are able to increase the order execution efficiency to 90%. TQR is based on linear and nonlinear correlations of mathematical spaces relative to a proprietary system of coordinates. If this sounds like an alien language to you, let me break it down. In simple terms, the theory posits that the electronic exchange market operate by a set of physics. Knowing that set of rules allows us to optimize the efficiency of program trading and portfolio management systems. That is how our algo can achieve a high win rate across different financial markets. As we mentioned, our algo can be used on different financial securities. They include equities, bond, futures, commodities, and crypto. The total addressable market is over $200 trillion worldwide, and we will be getting into equities and crypto first, totaling around $72 trillion. Next, let's look at some of our competitors. These are some of the well-known quant hedge funds that are consistently beating the market. The numbers are based on the available information that they disclosed. These firms are similar to us in a way that they also rely heavily on quantitative-based strategies and algorithmic models for trading. But unlike those firms, which may use many sophisticated models that take a large amount of data as inputs, we employ a single algorithm that takes prices as the only input. And we can achieve a high win rate across different markets using the same algorithm. And that is what makes us disruptive. Okay, what we are looking for is someone who can help us manage our growth and arrange our capital management, our capital requirements as we scale up. With that said, $1 million of capital will get you 10% equities in the LLC with either quarterly or annual distribution, depending on the negotiation. The investor will also get 10% of the revenue from the sale of our technology projected by year 4. And with that will take us to our projections. These projections are based on our current simulations with TradeStation, assuming we are operating with proper capitalization. As we can see in year 1, the projected revenue will be around $10 million. and most of the cost will go into income taxes, and the 10% equity will get you around $600,000 in net profit in year one. By year two, you will get your money back. And in the last column, that is the projected sale of this technology. The sale price will be based on a conservative multiple of the revenue figures in year four. And again, the 10% equities will get you around $9 million, $90 million in this deal. And lastly, let me introduce you to our team. On the top, you can see the founder, Mr. Dimmick. Mr. Dimmick is a veteran with a Juris Doctorate degree, currently working in a secret security clearance position with the US Department of Defense. He began developing the theory some time ago and filed the patent in March of 2021. And below that would be me. Before Relativity, I worked as a financial operations consultant at Accenture and as a accounting analyst at State Street Corporation. Currently, I spend most of my time doing simulations and finalizing the algorithm. And that is how Relativity optimizes financial markets. Thank you all for attending.